It was a mixed day on Wall Street. This is the Meerkat in one more time for D7. Yes, I will be not D7 for one more recording here. And this is for the broad market review of September the 3rd, 2015. Well, it was a mixed day on Wall Street. Let's take a look here at the numbers. We've got the SPY up 0.15, the Dow up 0.15. However, the Nasdaq was down 0.51 and the small caps down 0.18. So with those two leading the way down, it's a slightly more bearish than bullish on this mixed day. Banks, however, contradict that. They were up 0.5%, so strong banks were much stronger today. The VIX down 0.66, and it closed there at about 26. So we are below 30, but we still need to get below the 20 mark. We have silver that was even and gold that was down 0.72. Oil did make a little bit of a comeback and then pulled back at the end of the day, but it was up 1.6 to end the day, and the dollar was up almost 0.5%. And the trend closed at 0.82, and no trend trade for Grok graduates. All right, let's take a look here at the charts. First, we've got the S&P 500 daily. And, we were rolling over here. We fell, bounced up, hit our heads here around the 61.8 Fibonacci, also around the 2,000 mark. And we pulled back, and now today, yesterday it popped up a little bit, but today, basically a doji day, not quite a doji, almost a firefly doji. And then we ran up, and then just drifted back down all day long with relatively low volume. Why? In observation of World War II and the signing of the armistice there. And so where do we go from here? Very interesting right now. I'm still on the bearish side. I'll show you a little bit later that the bear trades that I took on, a couple of them stopped out with minor expenses, but the other ones are still in the money, and the stops are now either break even or slightly in the money, as I'm still looking at this to be a bit bearish. Okay, let's take a look at the DIA. It too did this pullback, and it's up. Now technically, the DIA here is now in an up leg, in that we have two candles of higher highs and higher lows. And then we on the QQQ, or the Nasdaq, we have 1, 2. Also is in an up leg, even though it finished negative for the day. Technically, it's in an up leg. And then we have the small cap Russell here, and it is still technically in a down leg, and then we only have one with a higher high and a higher low. Let's take a look at the VIX over the last several months here. We go all the way back here to February, and we've been stuck in this range, stuck between 12 and 20 this whole time. With only this one flare up here to up to 20, but mostly between 15 and 12. And then at the end of last month, boom, 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 it went up to 52. It went up to 52. So what do you think is going to happen? It's going to snap back, and it did. It snapped back really hard the next day, down in the 30s, and then it bounced back up yesterday, back above 30, and now we've closed back down here at 2609. But we should expect continued volatility in the markets as long as this VIX is up above the 20 mark. We need to get back down towards the 20 to start to see some more stabilization in the market. So right now, sitting on your hands and not being in a lot of positions is okay, especially coming up on this long weekend, and with the China markets closed these 2 days. That's 5 days of exposure that you don't really know what's going to happen when the markets open by next Tuesday. Earlier this week, I shared a couple of the bear trade setups that we had in the V newsletter, and here's how a couple of them turned out that are still in play. First one is QCOM, it's QCOM, and it had, let's see here, pull this up here, and it had, it was in a bear pullback, and it triggered here, and now it's pulled back up a little bit, but now the stop for this trade is at break, just a little, right at break even in a little bit. So it'll be a true break-even trade. Next, I showed you on PB. And PB here, it triggered in the trade right here. and now it's come back, and today it did, the market rose, and then it pulled back. So we now have a stop here at break even on that one as well. And then one that's turned out really well here is SYMC, and it too triggered here on Monday, and look at that drop, and it stayed down here, did not rise back up. So now we have a stop in the money on this one as we start to play this one. And again, as long as the markets are in bearish to neutral mode, I'm going to stay in my shorts. And if the market does turn bullish, then I will be ready to stop out on those shorts and get ready to look at longs. This is Mark the Meerkat. I just want to remind you of the Jack Swagger's quote. There's the fool who does wrong all the time, and there's the Wall Street fool who thinks he must trade all the time. Have a great long weekend. Trade well.